Good afternoon, everyone. I think it's been a minute since our last conversation. Been up and down for reasons, but then I believe everything that we'd mentioned earlier that has been actually coming to fruition in terms of the growth, in terms of the capital, in terms of the price for gold. I've been bullish for the longest in terms of gold, and for today, the reason why I'm actually doing this analysis is because I've been receiving quite a number of requests or else a lot of calls from different clients, getting to know exactly where is the gold moving to, and that's a very critical question, especially looking at where the gold is right now. And the reason why it's because we have had a couple of consolidations here and there, and I've been growing my craft over time. I've come to notice that one of the most important thing actually is to understand if the trend is actually ending or is it still continuing. Basically, that's a difference. The difference between a retracement and a reversal. And the reason why I'm saying that it's because this it's not a retracement. This is not a reversal. This is a retracement, and you can actually realize by how the market is moving. See, gaps which are actually not being respected, gaps which are not being respected. The other thing is actually I wanted to also identify, talk about something which is um, uh, 1 hour imbalance. This is actually not a 1 hour imbalance, if I can tell you the reality. Well, it depends on how you view at it, you look at it. But then this is not a 1 hour imbalance. If this was an effective 1 hour imbalance, it could have started from this level here. This could have been the 1 hour imbalance, full of it. So it's not a 1 hour imbalance. It's something that uh, I've also been, struggling with to understand the difference between this one imbalance and this one imbalance. But then you also come to realize that this it's not a selling market; it's actually a retracement market. I Market has been buying for quite a number of, you know, it's really been pushing a lot, and it's one of the moves that I haven't actually capitalized uh, a lot on, and I feel a bit bad about it because the only trade which was actually the premium trade that I actually took was, I think this was the only trade that I actually took. This was actually the only premium trade that I took from that market. The whole buy has been me. I don't know what has been happening, but then either way, I think also personal issues to also to try to actually psychology and also other things outside the market also try to define the psychology. But then your performance. But then I wanted to also mention a couple of things. This is not a retracement market. This is not a reversal. This is actually a liquidity graph. The reason why I'm saying it's a liquidity because you actually notice that the bodies on our candle actually on our now are actually closing above the previous range, not really the previous range or else but the previous um what do you call this, the previous demand. Either way, on the lower time frame we have something which is important here, but then that's not something to discuss right now. I just wanted to mention this specific area. You see that the bodies are closing above, the bodies are actually the here market traded within a 5 minutes FVG and also 0.3 level at this specific area. If you actually look at it from this level, so market hasn't been really then we also have this specific area which is actually the main demand responsible for this consolidation, right? And from that level we see that um this is the main demand responsible for this consolidation, and then this area, specifically this area here, this demand is the one responsible for this move. Okay, I've been incorporating a couple of things into this trading model because now you also realize that different markets require different strategies of trading, and you see, market is actually coming back to this demand which is responsible for this consolidation. Market, then there's a clean over push, and then we have this market coming down to this specific area here again. Um, to collect liquidity. Something weird that I've been watching over the last, probably over the weekend this week, been quite on the screens trying to backtest on what exactly is happening. And yeah, we see a couple of things. And let's discuss this area, and let's discuss that area, and also we also discuss this move. Okay, these are two trades that I've actually lost, and I was actually curious, why did I lose them? What really happened? What exactly happened? Well, at first, I had my narrative was a bit. Let's talk about this specific trade here. So, a market comes down to this specific area here. You realize this is actually a zero point 0.3 level. Okay, let's just uh, not really a this is the zero point 0.3 level of this specific range here. So being a zero point 0.3 level of this specific range, okay. So I was expecting market actually could just push from from that level. That's something that I was actually very, positive about. But then, because of the market conditions, I think I was a bit slow with it, and I didn't take the trade. But then, after that, the reason why I'm saying that I was hesitant to take the trade was I had a narrative that the market clears this specific zone, comes back to this area to clear the 1 hour imbalance, which was around here. You'll notice. Let me just go back to the 1 hour imbalance. Market trades this specific zone, comes back to trade this specific area here. That means that it's closing above this specific zone, and then immediately coming back to probably zero point 0.3 level around this specific area. There's a slight demand around there that I was looking at working with, but then not a very strong one. So first things first, the narrative fails. The reason why it fails because the market did not close above this specific area. Um, Market didn't close above this specific area. So what does that mean for me? That means that I cannot use the whatever which was here to actually make a move. So that's an ignored trade, and I leave that market. However, something else within the same area happened. Um, let's go back to 5 minutes. I'm trying to incorporate as the lowest time frames as possible because the market is actually not very friendly with I would say recklessness. Immediately the market touches around here, it drops. This is the reason actually. This is the thing that I was talking about. You remember talking about the difference between a 1 hour imbalance and an imbalance. So there is an imbalance. This is actually an FVG because it's from high and low. So there's nothing in between. So we have this. So if at all you are looking at the price, this is a clean confirmation that the price is actually going to sell. So the market comes back, consolidates, and then comes back to clear this imbalance. But then if that trade not if you didn't feel like it's it's enough confirmation, we also realize that there was a clean drop which happened around here, and then we have our sales. It's a clean around it's a clean if you take it from here, it's around, and focusing around there, that's around 300 pips. Quite impressive, right? Now now look at this market from this specific area. It's a quite a different story here. And one thing that I've actually come to notice is that gold is buying with technicals of US30, or else the indices side of the market. And we have this. The market comes to what we call liquidity grab. It's around here. These are liquidity grab, if I might say, down here. And then not just liquidity grab, but also comes to take um, trades on the main demand, which is responsible for the higher time frame push on the other on the extreme left. So we have this market coming down to around this specific area. So we have this. It creates a demand. It creates a specific, a small demand, which it's actually respecting. One thing that you actually realize that there's a specific model that I'm actually trying to, you know, share with you, and the reason that's the reason I'm actually coming to lower time frame to also, look at how things have been. Uh, you realize that there's a specifically small demand around here. Well, for me, because market didn't much of a buy, so I was expecting probably the market could continue selling. And the reason why I'm saying that is because I was looking at the market from that 613 for buys. I'm still looking at it from that level, but then, but then not very positive as of now, because we've had a current move, and I kind of believe that move could be the main move in terms of um, buys to around that 800. So um, we have this, we have this market coming, around this specific area, which is very important around here. Comes back to this demand again, and something also happens. There's a weak downside, but then forget about the week, and we also have the market closing above, the bodies closing above this area. um if you were to take this trade from this specific area, probably you could have risked around 30 pips, which is quite it's quite minimal. Something else, and intuition actually was actually telling me there's something wrong that I'm actually doing, but then for reasons, sometimes you become you just become who you what you want to be, and you do what you feel like doing, sometimes being impulsive sometime and all that. But then still, I think it's been a learning process for this specific trend in terms of getting to know exactly what's happening, and now I feel confident enough to actually share this with you. So we have this market is actually buys to this specific area and then comes back. Now, instead of now using this specific wick, because you realize this is a black wick, not, you know this is a wick which came down to around here but then closed above this specific area. So we have this, you're going to use the blue, which is the bullish candle, and for that we have this specific area here. So the trade should have bought from this specific area or else around this specific area. So we have two areas. So at first you get around, you're around, you have 12 whatever 120 pips, but then the market also does something which is weird also again, which is also very comfortable with me, and I'm also getting used to it, because now the market is actually a bit of moving but slow but consolidating, but here and there, a bit of a lot of confusion. But then um let's look at this. We have this market coming back to this specific zone here again, and then we have our push. Um, Something else. Let's look at this. So, for those who trade like not really technicals per se, okay, like those who trade like microstructure or else the minor structure, which is around 5 minutes and below, we have this specific market here coming to respect that zone. We also have this specific area market coming to respect that zone, so we have 0.3s. But then now there's a pure market where you actually have to look at the lower time frame, which is 1 minute and 5 minutes. Quite not one of the best markets to actually trade, to be honest. But then market is still buying. My target's actually around the 800. That is the main extension, which is around 1.55, and not just one. Yeah, yeah, yeah. We also, but then what has been left behind? Because even though we are bullish, we can't just take trades from anywhere. You just can't be the guy who takes trades just because there's a lot of noise in the market, and or else the market is being, it's been buying and you've been left out before. So we have this market has been able to respect that area. That's quite perfect with me. But then the next thing is what? we have this being a four imbalance, and the market is coming comes back to clear that four imbalance. Quite impressive, right? But then immediately after that, we also have this move. Okay, we have this move, which is important. So we have a couple of imbalances being left. One is actually this specific zone here. That's an imbalance which has been left, which I believe market might or might not come to close that imbalance. But then if you look at it from that point, what are we looking at? Um, Market coming to specific around this area, which is around 95 again. And now from 95, you might be coming down to around that 650. This is a very weak narrative. Let me remind you that again, because market currently, we're not trading the same trading conditions that we used to trade a couple of months ago. So um, no no areas like this where we are actually kind of very sure about that. But then um, remember also, market doesn't actually have to react strictly to the zero point 0.5. So we're looking at what is there around zero point 0.3 level within that range, that is, which is a breaker and also a zero point 0.3 level. And we also have this specific area here. Around that specific area, I think the slight demand, the slight demand. Definitely, there's specific demand here. So, but then something else also I want to actually put you into consideration, and you have to look at it from actually a very deeper perspective, is that 613 is still a very viable zone. That means that the market won't have broken structure on the downside, but then it will still be buying. That's quite. But then with this kind of move, this buy, that you've noticed actually this low move is actually the strongest move. So um, being careful, being taking risk management has to be one of your key areas right now. I'm not trying to predict any market, but then I'm still looking at that 800. OI is on that 800. Um, but then it's up to the risk management. This week I've been be on the market actually as much. The reason why, it's because last week we had a loss. Last week, about one, I was not in the market. So this week I will be actually very careful, and especially on the trades that I'm actually taking, just to see how far I can be able to, how much you can be able to make. But then I believe um, one key thing that progress cannot be only measured by monetary value, but also the discipline that you actually um, have in your trades, on in your setups, the consistency, the narrative. Um, I see this is a one imbalance still, but then is it really a one imbalance? This is a 15 minutes imbalance. Sorry. So it's a 15 minutes imbalance, but is it really a 15 minutes imbalance? Well, there's a difference between this 15 minutes imbalance and some other imbalance. But then something else will, that's sort of things that we should be able to talk about the near future. But as of now, the reason I'm talking about this by market coming lower to these areas, because probably not really much. But then I'm still looking at that 800. All my eyes actually at that 800, but then I'm very, very, very careful with the market right now. Very tight risk management, but then yeah, sure. I think this is one of the weeks that I believe that we will be able to get the best from it, and also, yeah, sure. We maintain discipline and risk management, and we do this because it is what it is. That's what we do. We actually have nothing else to do, and the best thing is to give our investors the best value, or what you call value for their money. And for that, allow me to wish you a good week ahead. And yeah, sure, let's appreciate the days that we don't get anything, but we also learn from it. most importantly, risk management. And for that, bye bye, and let's see each other this coming week.